Takes us to our talk of the tape. What's really riding on those results next week in what is the busiest stretch of earnings season thus far? Let's ask Dan Greenhaus, Chief Strategist for Solus Alternative Asset Management, back with me at Post 9. It's good to see you.
Thank you, sir.
So it's been a bit of an unsettled week, obviously. Volatility's picked up a little bit. Does tech come in next week and save the day, or does it just raise more questions?
No, listen, I think the important thing to note, I would argue, about tech is that while the market sold off, it's been largely valuation. And for most of these names, not Apple, but for most of these names, we've seen revisions to the upside. And from a performance standpoint, Google and Meta have looked really strong in the face of a weak tape. Obviously, that's something to do with digital ad trends, et cetera. But I think more likely than not, you go into next week thinking that tech, certainly those big tech names are going to be more helpful than hurtful.
So let me ask you this. Yields remain elevated, near 5. Let's just say the 10-year remains near 5%. Mega cap earnings are good. Is that good enough to outweigh the higher level of the 10-year?
Yeah, listen, we clearly there's been a problem. This last leg higher in yields is the story, obviously.
Because of the speed, too, right?
Yeah, and what I was going to say exactly that is it's not really the level per se, although the level can be worrisome. It's the speed at which you get to that level. And since, call it mid-July, the market has clearly had a problem with the rate at which rates were going up. And so to your point, like if the Fed meeting comes and Jay Powell, we don't raise rates and doesn't really tell us anything that we don't know, which should be your expectation going into the meeting, and then the EPS or the earnings for those big 4 or 5 companies, and also Visa, MasterCard, et cetera, are healthy enough, I think that sets the stage for what will ultimately be a late year rally.
There's like a 99% chance, at least probability, according to the market, that there's not going to be a hike in November. So that's done. But what about yesterday? What was your takeaway from Powell? I feel like the market didn't really know what to make of it. Maybe that was the point.
Yeah, listen, I don't think I sort of have an issue sometimes because I follow this very closely and have been following it very closely for 20, 25 years or whatever it's been. I don't think he said anything that we didn't know. And more on balance, I think in general, the Fed isn't telling us anything that we don't know. They're data dependent. We can quibble about whether they're too data dependent, but they're in a wait and see mode. If things progress the way that they're supposed to progress, they're probably done. This is, I think, the baseline. They're probably done. If things get a little hotter, then they'll probably raise 1 or 2 more times.
Two data dependence, an interesting point that you raise. I think I was reading Mohammed El-Arian, who was suggesting the same thing. Too data dependent, not focused enough on what they've already done, which isn't in the data that they're allegedly so dependent on, which raises the risks of going too far and causing an issue that didn't need to happen in the first place.
I mean, the risk has always been that, and this is true cycle after cycle, the Fed over tightens. And as I said, the analogy I used, I think, let's call it 12, 18 months ago, 10 guys and girls in a room, to oversimplify, 10 guys and girls in a room are not going to get it right. I think what I would push back on Mohammed's point, and a lot of other people's, is just note that we don't really know how long and variable the legs are.
Nope, I think that's part of his point.
Well,
nor does the Fed, which means keep that more in mind than the data.
No, but make your decisions. Yes, but what I was going to say is the other way. Meaning,
in other words, on the economy, the strong economy. That's the data that Powell's obviously so fixated on because he talked about it yesterday.
Yeah.
There's essentially, and I'm paraphrasing, there's just too much demand. And that's why inflation on the services side is as sticky as it is and doesn't seem to want to go down anytime in the near future.
Well, yes, and let's forget the good services and just look at American Express, who reported, and when asked if there was weakness, basically said they're nothing. We're seeing nothing in the way of a weak consumer. And a lot of the banks had very positive things to say about loan demand and the consumer. JP Morgan's CFO, when talking about it, said nothing in terms of weakness outside of what should be expected. So far, earnings season's gone really well. And again, forget the macro data for a second. Just from a stock-specific standpoint, nothing in corporate earnings season thus far is giving me pause.